All right, so I have interviewed over 2,500 investors, high net worth people, typically net worth of 2 million or more, on which is more important, cash flow or appreciation. Now, most people will say one or the other, right? Hey, I like cash flow or I like appreciation for this reason. Well, I will say hands down, cash flow is superior. It's more important. It reduces risk as you get paid. You can cover living expenses. It's a lot of money someday with appreciation is great, but it doesn't help me today. And so we're going to get into it. I want you to fight with me and argue if you don't believe this. Let's jump in. I'm going to go over in 3 easy steps. Let's go for it. All right, quick intro. My name is Bronson Hill. I'm the CEO of Bronson Equity. We do apartment buildings like this. We also do cash flowing businesses. We do things that are tax advantaged also, and we look for different types of investments that really help investors to reach their investment goals. I'm not a financial professional, so get your own professional advice. Let's jump in. So the first reason why I love cash flow over appreciation is that it's predictable and it's stable, right? It has predictability and stability. So once you know, like for me, I knew my number each year was around 60,000 or 70,000 per year. I knew then for 5,000 or 6,000 a month, if I could bring in 5,000 or 6,000 a month through my investments, I was financially free, right? So monthly cash flow or quarterly cash flow allows you to cover living expenses, right? Predictable returns, it offers consistent security, right? It helps you know that that's going to be covered. Again, with appreciation, you'll make some money one day, but it'll cash out, but then you've got to basically start living off of that money if you want to actually spend it on certain things that you need, but you can't actually cover things like your mortgage or car payments or travel or things like this because you have something, you want to continue to have that working for you for longer versus cash flow you can. And so that's the first reason. The second one is it helps you weather downturns, right? Cash flow often will stay very steady during recessions versus things, valuations will go up and down. Appreciation, it may or may not happen. And appreciation values, they can fluctuate unpredictably. So we don't know exactly how things are going to go. So it's really what does allow you to weather downturns. Now, one thing that's happened the last several years is we had a lot of cash flow in our business from real estate. But now there's not a lot of cash flow there. Well, what happened, right? Well, debt costs have gone higher. Sometimes valuations have come down. There was an article in the Wall Street Journal that came out recently that said about 50% of people's mortgage payments was insurance and it was insurance and taxes, right? Which is crazy, 50%. That's been a big change, right? So insurance and taxes can go up and you can't necessarily control that, right? So having cash flow in your investments can be really valuable. So having investments even sometimes outside of real estate, which we've done things like private businesses, we've done car washes, we've done oil and gas, we're buying an e-commerce business now, which is awesome. And so that's really kind of how we try to do it. And then the last thing really is we reinvest for growth, right? We take reinvestments and we try to reinvest it for even more growth. That's why I like it, because you can take the cash that you're getting from an investment, and if you don't spend it on your living expenses, you can just reinvest it somewhere else, right? So as you're investing, you're getting your risk is being reduced as your funds are coming back, and then as you reinvest, it juices your IRR because you're taking that money that you could just have sitting around and you're putting it back into another deal or the same deal, right? So I would say the first thing really, kind of as a sum it up here, is start with cash flow, right? And people that I know that are worth, hundreds of millions of dollars, they also are looking for cash flow, right? This is why I like things like oil and gas and private business because it allows for it. Also, people that are not wealthy, cash flow is great because that's what gets you one step closer to leaving that job or retiring or the things that you want. And that's most people's question is, hey, when I leave this job, when I stop the business, how do I make money, right? It's not just about having a nest egg, it's having that nest egg actually generate cash for you every single month, every single year. So the longer you live, you're not working through your savings, you actually just have what you have, and that cash flow is continuing to come in. Doesn't that sound great? I think that's something we all need. So I'm gonna just share this quote with you. Real estate investing, even on a small scale, remains a tried and true means of building an individual's cash flow and wealth. That's Robert Kiyosaki. Absolutely true. Right now is much harder to find, right? It's much harder to find cash flowing real estate right now. And we see it in certain pockets, but again, there are other things right now outside of real estate that are providing much stronger cash flow. If you haven't joined our investment club, you can check out the link below. We're doing some awesome deals. Love to have you find out about those. Thanks for taking the time to educate yourself. Look forward to seeing you on the next video.